computer speakers. All participant lines are muted. Note the engagement icons on the left side of your screen. A copy of today's presentation is available in the handout section. To ask a question, enter it in the Q&A box. In the event your slide display lags behind the audio, we recommend signing out of any other programs as well as logging off.
Welcome to Insurance Industry Business License Compliance
F5
Explained
to
live
refresh the
webinar
page
that is
or
taking
access
place
settings
on
to
Tuesday,
resolve
August
technical
8th,
issues.
2023.
Today's
My name is
webinar is
Aisha
being
Stewart, and I will
recorded.
be your moderator.
You can access the
Please
recording
note,
using the
following
same
today's webinar, there will
URL
be a
used
few
for today's live event.
evaluation questions that
An
I will be sharing
evaluation
with you.
survey will follow at the end
Our
of the webinar.
presenters today are Hans Hawk, Manager Content Management, and Kayla Reynolds, Business License Customer Success Lead for CT. Without further ado, I would like to hand it over to Hans Hawk. Welcome, Hans.
Thanks, Aisha, as always, and welcome everyone to Insurance Industry Business License Compliance Explained. It's a long title. I'm joined, as Aisha mentioned, by Kayla Reynolds. In this presentation, what we're hoping to do is to paint with some broad strokes, give you an overview of the insurance industry with regard to licensing and compliance, and hopefully bring some clarity to what is viewed as one of the more complex business fields out there, certainly when it comes to licensing and regulation. So by the end of the webinar, you should have a far better idea of the structure of regulation that's applied to the insurance industry, including how the various aspects are licensed, what the licensing process looks like for both producers and business entities, or you might say agents and agencies, some of the major regulatory bodies responsible for oversight of the industry, how compliance is maintained long-term by insurance professionals. And then we'll chat a little bit about what's on the horizon for insurance industry regulation. And so before we get into it, a little bit about us. I'm Hans Hauck. I'm the Manager of Content Management for CT's Business License Division. I've been involved with legal research for just about 10 years now in various positions. Day to day, I oversee the BL Knowledge Base, which is our comprehensive sort of instructive collection of business licensing information. We have 150 different industries, give or take, that we deal with at CT, and they're all represented there in that knowledge base. And I also assist our other teams in analyzing and understanding business regulatory law. And Kayla, you want to introduce yourself?
Sure. Thanks, Hans. Hello, everyone. Thanks so much for attending. My name is Kayla Reynolds, and I have been with Wolters Kluwer for 3 years. My current role is a customer success lead, but I have been in the insurance industry for about 8 years. On a day-to-day basis, I interact with clients regarding all things licensing, everything from obtaining a license, renewing it, and everything in between. A vast majority of my clients are based in the insurance industry. My previous roles included working in the licensing department of the Iowa Insurance Division, to being the licensing supervisor for the Wyoming Department of Insurance. I'm a bit passionate about the insurance industry, specifically licensing. Now I'll turn it over to you, Hans, for the agenda.
Yeah, thanks, Kayla. So that's us. And now if we could go around and have each of you introduce yourself. I'm just totally kidding. That would take hours. I'm sorry, I had to get that in there. Okay, let's take a look at our agenda for today. I'm just going to move to the next slide here. So we're going to start off with an overview of the insurance industry, what the various terms are, how things are laid out, the various entities involved, and what's considered a part of the industry. We'll also look at the regulatory structure of the industry, so which governing bodies are responsible for processing applications, making rules, things like that. Then we'll take a deep dive into licensing. So we'll go into, which sorts of business activities require an insurance license and which do not, what kinds of businesses fall into the realm of insurance regulation, how the legal language is typically structured, things like that. Then we'll talk about how a license is obtained, both by an individual agent or producer, and also by a business entity or an agency. So what that application process looks like, what needs to be submitted, etc. Next, we'll discuss ongoing compliance, so license renewals, continuing education, the things that license holders need to do to remain in good standing as time goes by. And then finally, Kayla will give some insight into how new laws and rules are being created all the time for the insurance industry. So she'll talk a little bit about some laws that are currently being implemented and what may be on the horizon for insurance industry regulation. Depending on the amount of time we have left, we'll answer some questions at the end. So feel free to input your questions into that Q&A box as the presentation proceeds. If we don't have time to get to all of the questions, we will, try to follow up in the coming days via email. I usually get them follow up by the next day or so, and we'll be sure that we address each one. So feel free to input your questions there. And again, as Aisha said, it would be super helpful if you could stick around for just a minute or two after the webinar to provide us with some feedback by answering a few quick survey questions. So with all that squared away, we can jump right into it. Kayla, do you want to start us off?
Absolutely. So to start things off, I think it's best to have a good understanding of how the industry is structured. There are generally 3 standard levels of insurance: the insurance carrier or the company, which trickles down to the insurance business entity or agency and ends with the insurance producer or agent. And then if you want to go even farther, it'd be us, the consumers. I will give a brief view of each tier's role in the insurance industry and how to this innovative market. So if we're going to the top of the pyramid, that's the insurance carrier. At this level, the carrier is responsible for submitting their rates, forms, and policies to the Department of Insurance to review for approval before being allowed into the market. So think of this as the insurance carrier, the people that you see on TV, those commercials. The carriers are also subject to examinations conducted by their domestic state Department of Insurance every 5 years to ensure that they are abiding by all rules and regulations. They are arguably held to the strictest standards by the Department of Insurance. So now we're down to the middleman, business entity, or also known as the insurance agency. This is going to be the little insurance agency you might know in your hometown, the place you can physically walk in if you have questions regarding your own policy, or maybe you want to shop around for a new insurance company. However, with growing technology, many agencies do not have a physical location anymore. They're now virtual, along with everything else, it seems like. But what does an agency do? The agency is selling the products of the big insurance company. They can sell one insurance company's products, or it may represent several insurance companies. The last level is the insurance agent, or also known as the insurance producer. Long live the days when I used to walk into my local insurance agency's office and have my agent explain my policies and coverage. Going through a 50-plus page document regarding the coverage of your most valuable assets can be, well, it's really not very fun. Your house, family members' life insurance policies, vehicles. Having someone explain what your policies mean, cover, and maybe where the gaps are, rather than reading a document, is what an insurance agent is supposed to be there for. So with all of that considered, these are just a few reasons why it was agreed upon by the states that this type of service and knowledge requires a license. Now that we've covered the 3 levels, what exactly does a Department of Insurance license? There are many different license types and levels, and not all states license the same things. We try to be uniform, or they do, but it's just not quite achievable yet. One type of license is an adjuster. These are going to be the people that come look at your car, house, or any other property that has been damaged and assess how much it's going to cost to repair. About 30 so states license public, independent, and company adjusters, but adjuster licensing is a bit different than insurance producer licensing, so our focus will be on business entity and insurance producer licensing today. Of course, there are some oddball licensing types as well. These are going to include managing general agents, rating organizations, bail agents, reinsurance, portable electronic, that's like the insurance you get on your phone, rental car, pre-need funeral, third-party administrators, and the list goes on and on. Since the insurance industry is ever-changing, more unique license types will surely be created in the future, and the list will just keep growing. That's the beauty of it. The bottom of this slide represents lines of authority held under an insurance producer or business entity license. The NAIC, which stands for the National Association of Insurance Commissioners, has a Producer Licensing Model Act. I know that was a lot of information, so bear with me. It recognizes major lines of authority. These are property, casualty, personal lines, life, accident and health or sickness, and variable. So I'm going to talk a little bit about what these are. Property and casualty usually go hand in hand. These lines of authority are going to cover physical property, damage, civil, and commercial level. That's going to be the key difference between personal lines and casualty. Example would be your vehicle or house or insurance for your business, and more recently, this is very similar. The main difference being it does not cover on the commercial level, only the individual level. So an example would be vehicle insurance for yourself. That's going to be personal lines. But again, it could be covered under property and casualty as well, just because personal lines is just a piece of property and casualty. Next one is life. You've probably seen 1,000 commercials on TV for life insurance. Life insurance is coverage for someone when they pass to help pay for burial expenses. You can get these huge policies or little ones. It just depends on the policy. Next, we have accident, health, or sickness. This is insurance that covers a person for medical bills and expenses. These are also where the Medicare policies are going to fall under. Along with the major lines of authority, there are several limited lines. A few of them are travel, crop, and surplus lines. Travel insurance is going to provide you with coverage in the event your travel plans are canceled, you unexpectedly get ill, there's a pandemic, all those different things. That's what this travel insurance is going to cover you for. Surplus lines is offered in almost all of the NAIC states. Surplus lines is unique coverage that it's not offered on the admitted market, so it's not your standard insurance. In simple terms, it's like an oddball coverage. A few examples are marketing insurance. You can get insurance for that. Celebrities and athletes also love to get body parts insured through surplus lines. So think about it. A star quarterback or baseball pitcher literally makes their money on their throwing arm. What happens if they get injured and come back from it? That's where this surplus line coverage comes in handy. And it's really coverage that you can get for anything, and you really can be creative with it. It's something that's the last limited line I'm going to cover is crop. Only offered in a few states. Most states just crop coverage is under the property and casualty lines of authority. But the states where it's separate, it's mainly issued in West states and covers farmers and ranchers if there's a decline in crop yield or their crops are damaged from natural disasters. I am from the state of Iowa, and a few years ago here in Iowa, we had a huge storm called a derecho that came through, and it wiped out a lot of the corn and bean fields. That was a huge deal since over 80% of Iowa is farmland. It might not be pretty, but hey, it's farmland, and that's what we have here. I remember the Iowa Insurance Division was out all around. The state was assessing damage as well and kept a close eye on the industry to make sure that consumers, farmers, and ranchers were protected. Luckily, derechos don't happen too often, but I'm sure there has been an increase in crop policies since then. I'm going to go ahead and turn it over to Hans to talk about a few of the main licensing systems used today.
Yeah, thanks, Kayla. I know a couple of you said there was a little bit of choppiness in the audio. We're going to try to get that fixed promptly for you, but I'm going to go ahead and take a look at some of the major regulatory bodies and associations involved with insurance compliance. And if you've ever dealt with insurance licensing or compliance in any measure, you've probably heard of at least one or two of these. Perhaps the most influential organization in the insurance industry, Kayla mentioned it on the last slide, is the National Association of Insurance Commissioners, or NAIC. I guess you could say NAIC. I'm going to say NAIC, just easier for me to say. And NAIC actually dates all the way back to 1871, so 6 years after the Civil War ended, if you're a history person like I am. But NAIC is the chief regulatory body of the industry, and it's really concerned with setting standards for insurance providers across the U.S. and its territories. So, in an industry as complex and rife with, contracts and legal matters and concern with the safety and health of the public as insurance is, there needs to be a unifying thread across the states. You don't want too much of a difference between New Jersey insurance and Pennsylvania insurance. It would just make things too crazy. So what NAIC does, it creates and prescribes a baseline of regulation that all states can aspire to, so that everyone involved is essentially speaking the same language and following the same basic standards. And NAIC is made up of individuals from each state that obviously have some experience in insurance. They meet a few times a year to discuss current events and create solutions. So some things that NAIC has done specifically, and Kayla's going to talk more about this as well, but it did create the industry's comprehensive model law, which again prescribes standards for insurance regulation that all states have adopted in some capacity. And again, Kayla's going to talk about that later, but NAIC also maintains educational courses and training materials. It creates uniform applications for various matters that insurers who are licensed in multiple states can utilize, so that they aren't filing 50 different applications across 50 different jurisdictions. And NAIC also maintains swaths of data related to the industry that can be accessed on its website. So NAIC is a pretty big deal there. Then you see SBS, that's state-based systems. And this could really be a bullet point under the NAIC umbrella because it's technically a part of NAIC. But state-based systems is essentially a collection of online tools designed by a team at NAIC for insurance licensees and regulators to use. So SBS has things like a license manager, where businesses and producers can keep track of their various licenses and registrations. It has a license lookup tool where you can verify the licensure of a producer or an agency. It's got tons of different reports that can be accessed, applications for education providers, tools for tracking cases and investigations into noncompliance matters, and tons of other helpful systems, as the name indicates. Next, we come to NIPR, which is the National Insurance Producer Registry. And NIPR, it's sort of your full service online hub for insurance license application processing. So, from the NIPR portal, you can apply for a license as an insurance producer, business entity. You can submit all of your supporting documentation, pay the application fees, add lines of authority to your license, and update your license information as the system dictates. Now, every state, I believe, utilizes NIPR for some facet of licensing, and some states use it for just about every facet. It's a pretty valuable resource for states themselves because it outsources a ton of administrative work that they would otherwise have to handle themselves. It also streamlines and standardizes the insurance license application process. It just makes everything easier and more uniform. But aside from licensing applications, NIPR also offers licensee lookup functionality, customizable reporting capabilities, and company appointments, which we'll talk about later as well. And then finally, the last bullet point there, we have the state boards of insurance themselves. While almost all states have outsourced, some of their responsibilities to the various national associations that I just mentioned, state boards of insurance are still the main enforcers of compliance. They're the verifying legal bodies and the actual bona fide teeth of the insurance industry when it comes to regulation. The states, have the final say with regard to their insurance laws or really which part of the NAIC model law they choose to implement and how. They're the ones who initiate investigations and bring disciplinary actions against non-compliant producers or entities. And oftentimes they still license various business types. So while an agent producer might be able to apply and obtain a license via NIPR, a title agent or an assessor or one of those kind of oddballs that Kayla mentioned on the first slide, they might need to apply directly through the State Board of Insurance. So the states, they haven't given up all of their stake in regulation, and it's a good idea to still keep track of the goings on at whichever state boards you are beholden to, as they're frequently adopting new rules, implementing new legislation, and communicating with insurance licensees and the other vested parties. There's actually one more bullet point I probably could have put up here, and that would be for SIRCON, SIRCON. And that is sort of a third-party licensing portal. It's kind of like NIPR. If you ask Kayla, it's not quite as user-friendly as NIPR, she'll tell you. But it is a system. It's sort of an affiliate of Pearson VUE, which is an exam center, exam organization, and so they do help with setting up exams and processing applications as well. So that's CIRCON. Okay. So now that we've gotten an idea of the essential structure of the industry and some of the major players involved in terms of regulation and lawmaking, I think we can dive a little deeper into who needs a license, who doesn't, and the ways that licensing laws are structured for insurance. Most states, I say most because there are always outliers, but most states' insurance license statutes are structured like you see up on this slide there in the quotes. California's exact license statute, I have it written down here, for example, reads, quote, "Unless exempt by the provisions of this article, a person shall not solicit, negotiate, or effect contracts of insurance unless that person holds a valid license from the commissioner authorizing the person to act in that capacity." So there you go. Now this applies across the board to companies or the carriers, business entities or agencies, and the individual producers. California's law, it then goes on to state that anyone deemed to be operating in any of these capacities without an appropriate license is subject to a misdemeanor fine not exceeding $50,000 and up to a year in county jail or both. So we certainly want to make sure we're duly licensed no matter what we're doing. And a lot of state laws are pretty similar. Just as a side, most licensing laws in general carry similar penalties to that one. Actually, California is one of the strictest, but generally operating without a business license in whatever field you're in is considered a misdemeanor, carrying fines and the threat of imprisonment. But aside from that, letting a license lapse or not submitting the required reports, it can cause a board to revoke your license, causing your business to not be able to operate until the non-compliance is resolved. And that can cost you way more in lost revenue than a fine might be. So, there are a ton of other headaches as well that you'll encounter by not being aware of the rules and regulations. So that's my soapbox word of warning. I'll get off there now. But back to the slide. So who needs a license? We're talking about individual agents who sell insurance, generally the business entities that employ those agents and advertise as being providers of insurance, and the major companies who are considered the carriers of that insurance product, so Geico or Allstate. Not to mention that, licenses are often, but not always, required for that swath of insurance adjacent professionals that Kayla spoke of earlier. So, adjusters, bail agents, managing general agents, things like that. Who does not need a license? Most states have exemptions for insurance analysts and examiners. So those are kind of the auxiliary sort of employees that do all sorts of risk analysis on behalf of the firm. They analyze contracts, things like that. They're generally exempt. There's usually exemptions for really any non-commissioned employees. So anyone whose pay isn't determined by their ability to sell insurance products. Attorneys are almost always exempt from needing a license. Examiners, again, sort of like the examiners or analysts I just mentioned, but those are more strictly concerned with like real estate, mortgage contracts, and things like that. And officers and directors of insurance agencies or companies, unless, of course, they're commission-based sellers of the product themselves. And there are actually a ton of little clauses in various state codes that can exempt a person from licensure, like maybe they're mainly concerned with selling a physical product and the insurance is sort of incidental. So like a 2-year replacement insurance policy on an electronic device, the retailer themselves of that device probably isn't going to need an insurance license. So it's super important to know the statutes of whatever state you plan to operate in, obviously, especially if your business model has kind of complex wrinkles. You want to be sufficiently licensed where you need to be. And obviously, you don't want to hold extraneous licenses that you don't actually need. But now I'm going to toss it back to Kayla to dive into what it looks like to actually obtain a license in the insurance industry. So take it away, Kayla.
Thanks, Hans. So now you've gone back and forth and determined you need a license. So how do you get one? States may have their own unique requirements here and there, but in general, they have attempted to follow the same general processes to obtain a license. This is where the NAIC comes into play and that Modeling Act. So step one is getting licensed in the home state, the state that you live in. So once issued, this will be your resident license. Pre-licensing courses may be required before you can be eligible to exam for the lines of authority you want. If no pre-licensing courses are required, the next course of action is an exam. That's right. You thought you were done taking exams, didn't you? No. The good news is there are testing vendors out there that provide study materials, practice tests to get you prepared for these exams. Pearson VUE that Hans mentioned is a great place to go to for those practice exams because they are essentially the testing vendors for a lot of the states. The exams will include product knowledge of the lines of authority you're wanting to get, as well as the state-specific questions which target knowledge of legal statutes and regulations. Other prerequisites prior to applying for a license may include age at a minimum of 18 and background history. Some criminal background histories may make an applicant ineligible to be licensed or to even participate in the insurance industry at all. So this is going to be key. There's some criminal histories that require what's called a 1033 application, and say you're not actually getting an insurance license, but you're going to be, working at the front desk of an insurance agency. So you don't need that license, but you're still going to be participating in the industry. So that's where it might require this extra application if you have some sort of criminal background history. A majority of the states will require fingerprints or the background check. The fee usually needs to accompany the application, and any supplemental documents may be needed as well. These can include documents supporting background history, a bond for certain license types, or maybe a driver's license copy. A few states also require some sort of an affidavit. The processing times vary based upon license type and the state. Some applications can be approved in as quick as 2 days, while others can take up to a few months. After the resident license is issued, non-resident licenses can be obtained. The states have agreed for the major license classes, they will honor the resident state's exam and sometimes background check. For example, if a producer has a life license in the resident state and wants a life license in a non-resident state, they won't have to take an exam again. The exam is reciprocal. The standard non-resident process includes an application, proof of home state licensure, a fee, and potentially supporting documentation. A non-resident producer license is usually easier and faster to get since a non-resident state is dependent on the resident state to do their part in licensing an eligible person into the insurance industry. Next, we're going to move on to obtaining an insurance agency license. Like on the individual level, there are no 100% uniform requirements, but states generally require the same prerequisites before a license can be issued. Several states will require an agency register their business with the Secretary of State, and others require name approval. There are even a handful of states that require the agency to get their business name approved by the Department of Insurance, to apply for a registration with the Secretary of State, then finally be able to apply for the agency license with the Department of Insurance. So there's this whole back and forth. You got to jump through a few hoops, but eventually you'll get there. The application process may include a background check on any owners or officers, a fee, or corporate formation documents. Again, these requirements vary by state and license type. Along with an agency license, a DRLP must be tied with it on an application. DRLP stands for Designated Responsible Licensed Producer. A DRLP is simply the one, or sometimes more than one, person tied to an agency license that assumes responsibility for the agency license. A DRLP will hold the same lines of authority as the agency, and some states allow more than one to be tied to the license to meet this requirement. Other requirements may include an appointment after a license is issued. An appointment is a tracked relationship between an insurance agency and a carrier and an insurance producer and a carrier. The last thing I'm going to touch on is Georgia. They're unique and they require branch licensing. The application process is generally the same as an agency license though. So now I'm going to turn it over to Hans, who's going to talk about the requirements to keep and maintain an insurance producer and agency license.
Yeah, thanks, Kayla. So now that you've obtained your license and you're all set up and ready to do business, Let's talk a little about what needs to be done to remain in compliance going forward as the years go by. So starting at the individual producer level, you'll need to renew your license, usually every year. Sometimes every other year for special license types, but usually every year. This usually involves submitting a renewal application form, most likely through NIPR or another online portal, depending on the state, certifying that none of your basic information has changed, paying the renewal fee, which is often about the same or maybe slightly less than the fee that you paid to obtain a new license, and then also showing proof that you have completed the required amount of continuing education. Now, how much continuing education you need to complete is a requirement that is typically set by whichever state you consider to be your home state. But usually it's between 10 and 30 hours of coursework involving a combination of materials specific to your license type and lines of authority, and also a few hours dedicated to industry ethics generally. Now, courses are typically classified as either contact or non-contact, which essentially means in-person with an instructor or remote self-guided virtually. But continuing education is something that you really want to plan for and manage so that you aren't left with license renewals due in 2 weeks and you haven't even started any sort of course yet. It's something that's best kind of spaced out over the year rather than plowed through all at once. And be aware of the changes in your continuing education requirements if you should do something like add a new line of authority to your license or change your designated home state. Continuing education is something that often creeps up on licensees, so you should have a system in place for managing it. Next up there is company appointments, and this is more of the responsibility of the insurance company. They're required to acknowledge and pay for their appointed producers each year, so I included this here just as an extra topic to be aware of. It's a good practice to periodically make sure that your appointment is in good standing. And then, of course, we have change events. So there's going to be a time in the course of business where something changes. For individuals, that might be, you change your last name, you get married and you change your last name. States are going to require that you submit a name change filing so that your license can be updated to reflect your new name. Moving to a new state might require you to designate a new home state for purposes of licensure. And this, usually requires a filing with both your previous state of residence and your new state of residence, as well as updates at least to all the other licenses that you hold in other states, assuming that you're a multi-state insurer. And it can also affect your various annual requirements. So like we mentioned before, continuing education requirements might change, et cetera. And of course, if you decide to add a new line of authority onto your license, this is going to require an application filing along with proof of any sort of pre-licensing education requirements for that specific line of authority. So, all these changes, which are pretty common in the business life of an individual insurance producer, can cause filings or notifications to be required, not just in your home state, but in all the states where you do business or maintain a license. Now, a lot of producers only do business in one state, so that they don't have to worry about a lot of the multi-jurisdictional kind of thing, but especially entities, which we'll get to in a minute. But it's just more to consider. You don't want to be caught with a license portfolio full of inconsistencies between state licenses. Boards of insurance, they can be accommodating regarding missed notifications, or they can be strict, so you don't really want to roll the dice there. And then next, we can move on to business entities or agencies. So like producer licenses, business entity licenses typically need to be renewed annually. This again involves the submittal of a renewal application and the payment of a fee, but generally no continuing education at the business level. Sometimes, depending on officers, depending on home state requirements for officers and owners. One area, however, where businesses might need to be extra vigilant is changing legislation. So states and regulators are frequently passing new laws, like I mentioned, making new rules or getting rid of old ones. And it's important that businesses stay on top of all these changes so they can remain compliant. And then, of course, there are a slew of changes that a business might undergo during its lifespan. So ownership changes is a big one. It's really dependent on your state and license type as to whether or not a change of ownership is going to require a license transfer filing for your agency, or maybe just a business notification or a brand new license altogether. Business name changes can happen. That's another one. These can require change filings to be submitted to every state where you're doing business as an agency. Same with address changes. So maybe you moved your headquarters to a new location. Well, that's going to need to be updated as well on all the licenses. Now, often these changes can be streamlined, via some of those online portals that I mentioned earlier, NIPR, and thank goodness for that. But it's still a major undertaking, and you want to make sure your changes were accepted and implemented at every state where you're operating. What else? I think I skipped new product lines. So maybe your agency wants to begin offering new types of insurance. This will require you to update the various state boards, as well as make sure that you have a DRLP that is duly licensed to provide that line of authority in most cases. And then if your DRLP changes or leaves the business, you'll need to find and designate a new DRLP who can qualify your business appropriately. And then finally up there, new market areas. So maybe you've been offering insurance within the continental US, but you want to move into the external states and US territories. Obviously, that's going to require some applications with those boards and notifications to your current areas as well. So all this is to say that simply obtaining a license as an insurance producer or an insurance business entity is far from the totality of your obligations. Compliance is really an ongoing process that you need to consider, or else you'll be subject to penalties, license revocation, loss in revenue, and all that other nasty stuff. So I mentioned changing legislation a minute ago. Kayla's going to expound a little bit now on how legislative changes are initiated, who initiates them, and what's on the horizon for the insurance industry. So I'll kick it back to you, Kayla.
Thanks, Hans. The future of the insurance industry can be exciting, but it's hard to predict, like everything else, it seems like. The insurance industry is forced to change with the ever-changing world. My favorite example of this is pet insurance. I'm biased, though, because I have a few thousand animals myself. In fact, before this call, I was talking to colleagues about equine insurance. It's a big market now, and it's booming. 10 years ago, pet insurance really didn't exist. I'm sure this started as a simple thought within an insurance company, who then sent it to the Department of Insurance to review rates, policies, and forms, which then grew and grew to cover many states. After states started to realize this was a new product that was really going to grow, they decided they need to uniformly come together and form a standard best practice for licensing and rules and regulations to use as a guideline to monitor this brand new industry. And this is just one example and one small piece of innovation and change in the industry. So how can anyone stay involved and up to date? There are various magazine subscriptions, online articles, and even podcasts out there. But if you want to go straight to the source, some great ways to get involved are NAIC articles posted on their website and the national meetings. These NAIC national meetings are held 3 times a year, and they're all over the country, and you can now participate virtually. They are about a week long and include the greatest minds in the industry, as well as regulators from all the states. Some of the sessions include the public as well as regulators. It's a great place for the regulators and industry being regulated to meet on common ground and bounce ideas off of each other. It's like a preview of what's coming down the pipeline. The NAIC also has committees, task forces, and working groups. These groups are formed to talk about specific industry trends or topics and to keep the states and industry on the same page. The State Department of Insurance highly depends on the industry for their opinion and really, what's coming down the pipeline to be innovative. These groups include phone calls usually on a 1 to 3 month frequency, with call notes being posted to the NAIC website. The public is usually allowed to join in on these calls, as well as send comments or suggestions. There's also what's called independent insurance agents, and they usually have them in every state. These are going to be a public board that represents the entire state. So, for one example, say continuing education. The insurance producers feel like they have too much continuing education. Well, then they could bring it to the independent insurance agents, who will then voice that opinion to the departments of insurance. It's a very powerful force. So with meetings and committees, the goal is for the insurance industry to be as uniform as possible within scope. It's not always achievable, but it's a goal nonetheless. In January of 2000, the Producer Licensing Model Act, also known as PLMA, was adopted. The Model Act was adopted by a vast majority of the states, agreeing to use this as a base for their state laws and regulations, as well as best practices when it comes to licensing in the insurance industry. The Act has been amended a few times and will continue to be amended as the states and NAIC see fit. The PLMA is just one example of what states attempted to base their legislation on. Following the NAIC website, as well as attending local sessions and following the proposed law changes, is a great way to stay up to date in the insurance industry. Now I believe Hans and I will open it up to any questions you may have.
Yeah, I think that just about wraps us up. I think we do have time for a few questions. Okay. How do agents attend continuing education courses? Where do I find courses? So yeah, we mentioned that a little bit earlier. I mentioned that courses can be considered contact, led by an instructor in person, or non-contact, so virtual. And I think, Kayla, we were talking about it before. You said maybe there's kind of like a hybrid where you kind of have an instructor, but it's sort of at your own leisure as well, right? I think you mentioned that.
It is. So I know for sure that Texas and Iowa still require that classroom requirement, but they have something new called Classroom Equivalent. So this is going to be really interactive. You're not going to physically be at a location, but it's so interactive that it counts as classroom requirement. So It'll have like a quiz every 15 minutes just to make sure that you're still there and you're actively participating. So it'll meet that requirement.
So you're not sleeping at your desk.
Exactly.
Okay. Awesome. And then where do I find courses? So we mentioned Pearson VUE is a good one, NIPR, the NAIC website, and state boards of insurance websites. I think California Board of Insurance lists like all their courses. You can do a course search right there. Usually if you're, moderately into the process of becoming a licensed producer, you will have heard where to find your courses by now. So let me see. Can my agency have more than one DRLP? Okay, yeah, good question. I think we also touched on it just briefly. So a lot of states do allow a business to have more than one DRLP. That's the designated responsible licensed producer, in order to satisfy the qualification requirements, right? So you remember that the types of the product, the lines of authority that the agency offers have to be matched on the license of the individual who is designated as the DRLP. So, for instance, like the business can't offer to sell travel insurance if they don't have a DRLP who is licensed to sell travel insurance, essentially. But to answer your question, yes, a lot of states do allow you to designate more than one DRLP for your business. So maybe you have one DRLP who covers life, health, property, casualty, and one who covers like travel insurance, like we said. Now, figuring out which states allow more than one, I'd have to consult the knowledge base, and I don't have that open in front of me, but some do. Anything to add there, Kayla?
Yeah, there's some states where you have to have those lines of authority that match, and then there's other states where the lines of authority of the agency are determined by what the DRLP has. So, if you go online and do a license lookup for an agency, it might not have the lines of authority because they are determined by the individual DRLP. There are a handful of states that only require you to have one DRLP, only allow one, but a majority of them allow more than one so you can meet that requirement of matching.
Awesome. And then real quick, I think we have time for just one more. We'll get it in here. Where do LOAs, lines of authorities like pet insurance, voice insurance, etc., fall into the mix? Are these officially licensed insurance types? Yeah, Kayla mentioned the pet insurance. They are definitely officially licensed insurance types. They require a license in order to sell them. However, what line of authority is required is going to look different depending on the state. So some states are going to put things like pet insurance or vocal insurance, body part insurance under the property and casualty umbrella or some other equivalent major line, while others might consider it like a limited line or a surplus line. And a limited line basically refers to a line of insurance for a very specific case or material. But yeah, there aren't many insurance types that you don't need a license to sell. And there's some weird ones out there too. Alien abduction insurance is one that I've seen, which I don't even know how you can collect on that policy. Wedding insurance for if you pay a bunch of money for a giant wedding and then your fiance gets cold feet or whatever. There are some weird ones out there. I hope that answers your question, Kayla. Did you have anything to add to that one?
Yeah, I just think that pet insurance is really one of those fascinating ones to follow because the NAIC, the states, the working groups, they all went back and forth to figure out where pet insurance should fall under. And it was deemed at the end, as much as we love our critters, that pets are considered property. So pet insurance does generally fall under the property and casualty lines of authority.
There you go. Well, thanks everyone. Again, if you could stick around for just a minute or two and answer some of those satisfaction survey questions, those really do help us a lot. Apologies for some choppy audio in the beginning. I think we worked it out pretty quickly. So we will distribute a recording of this webcast to anyone who registered and was not able to attend. I think anyone who attended as well. But again, we appreciate you attending and thanks for another great webinar.
Thank you, Hans and Kayla. And as mentioned before we conclude, we just have a few evaluation questions. The first one is, would you like to be contacted by one of CT's business license experts? Again, that is, would you like to be contacted by one of CT's business license experts? I'll give everyone a few more seconds before we move on to our second evaluation question. And our second question, please rate the value of today's webinar content on a scale from 1 to 5, where 5 is the highest and 1 is the lowest. Again, that is, please rate the value of today's webinar content on a scale from 1 to 5, where 5 is the highest and 1 is the lowest. And on to our final evaluation question. Please rate the value of today's presenters on a scale from 1 to 5, where 5 is the highest and 1 is the lowest. Again, that is, please rate the value of today's presenters on a scale from 1 to 5, where 5 is the highest and 1 is the lowest. Thank you for joining. This concludes today's live webinar. You may now disconnect.